Sunday, April 27, 2014, current time 10:12 GMT. Jay Meisler here with a weekend Forex trading outlook update. Comes off a very dismal and boring end to the week where your dollar traded 21 pip range. The market stayed within ranges as the Forex market stayed out ahead of the weekend due to the Ukraine cloud hanging over it. This coming week should be a week which is just crammed with events. Everything from the FOMC meeting, Yellen speaking, European inflation, PMI reports, U.S. farm payroll, GDP reports. I mean, it should be a news algo's dream. But we have Ukraine, and we're not sure how the market will react. If this was past times and we had a ratcheting up of news on Ukraine, you might see dollar yen gap lower, but something you can't bet on because the market, at least the FX market, is really reluctant to react to what's going on there, and probably not sure what's the safe haven in this environment. Typically, the euro would be under pressure, but it hasn't been. If you look at some patterns, your dollar's closed on 138. I think it's 12 out of 13 days. The only exception, well, last Monday when it closed just below 138. So really, essentially, it's closed on 138 for more than 2.5 weeks. Most of that's been between 138 now figured at 50. For 8 days, it was between 138 figured and 20. Dollar yen's closed on a 102 handle 8 days in a row. Last two closes were slightly lower, and sterling cable traded 168 5 days in a row. So let's look ahead in the week and what should be and what might not be. You know, if you look at the week ahead, the key event is midweek for the Eurozone when inflation data comes out. Flash inflation data expected to tick up more for technical reasons than any real pickup inflation. That may influence the ECB and give a cover not to do anything the following week, or at least it'll influence expectations about the ECB. So under normal circumstances, euro might take on a bid when the market starts focusing on, they call it hiccup, HICP, inflation data. In that kind of market, if euro did firm on that, then it would probably offer a selling opportunity because the market will probably then turn defensive ahead of PMI reports on Thursday, a European holiday on Thursday, May Day, and U.S. non-farm payroll on Friday, which is, I've seen forecasts of 230 to 250,000. How much of that is catch-up from the winter remains to be seen, but that would be the kind of market you would have. It would almost be like an easy scenario. But we have Ukraine. We don't know how it's going to react. And under typical circumstances, dollar yen would gap lower on Monday, but events have kind of ratcheted up with G7 looking to put on increased sanctions on Monday. But the FX market is reluctant to react to Ukraine. As I said, Europe dollar traded 21 pip range on Friday, the smallest one I ever remember, I think, for a daily range. And therefore, we'll have to see how the market reacts. If there are stops to run, maybe they gap it lower. But it just seems a reluctance to react to what's going on in Ukraine unless Russian troops actually go in. So here we are. If you look at your dollar quickly, let's go to the daily chart just to show what it looks like. We are essentially staying within this. Now it looks, 136.70 to 139 range. You could narrow it right now to around 136.780 to 139. And if you look at some other charts, it's really 130. Say 785 to 90 to 137.55 to 65. As I said, more important are events and technicals at the moment. Market would love to break out of this low volatility compressing range, and it will eventually. But while we have conflicting factors, we have Ukraine on one end, probably signs of a U.S. pickup on the other end. European inflation at the other end. I think we're going to start the market off very cautiously on Monday. We'll see if there's any kind of stops to run. If they do in Australia, New Zealand time, they'll gap, say, the dollar yen lower. But if they don't, then that currency will be watching 102 and it's going to set its tone. Same with sterling 168 and probably euro dollar 138. So those are big figure round numbers to watch. I'm going to post a link at the bottom of this article, this chart right here. It's called "How to Avoid the Forex Death Spiral." This is an article I've written. If you're a novice, experienced, professional trader, I don't care who you are, I've seen it happen to everyone, and I'm seeing it happen to people right now. Once you fall into the death spiral, you might as well just pack it in. So I think it's an article it's worth reading. It's a good weekend read. If it helps you, I'll be thrilled because I've seen too many people succumb to it, and that's why I wrote this article. So it's the links right at the bottom here. Good luck and good trading. We'll touch base early next week.